Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 14th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to trade within the 5-day narrow range here that's developing. You can notice here down at the bottom here the PivotBoss Advanced ADR indicator showing a compression signal over the last 5 days. Very, very typical after the rally that we had to begin the week of the month, the first week of the month here. You have a very narrow range after a big wide range in the first week of the month. Now you have this compression phase here, and that suggests that we are building energy for the next move. The last time we had a narrow compression signal like this was on this 5-day range, and it led to that big move down, followed by the reversal back up, and now we have another compression signal here. So again, looking out 5 to 10 days later, we could be looking at an increase of volatility yet again. Somewhere in the neighborhood of 125 to 150 points of range could be seen here very soon. If that range is broken to the downside, say it breaks down through 2860, 2870, we could be looking at a return all the way back down to recent lows. If we break this to the upside, we are running out of runway to the upside here before we start seeing all-time highs and perhaps rejection. So if we do break to the upside, I'd be cautious of a failed breakout, which could then lead to a push back down. Overall, we could be looking at further sideways range-bound activity heading into next week. Next Wednesday, we have the next FOMC meetings and the Fed interest rate decision on Wednesday, which is June 19th. That is going to be very, very important. The last time we got an FOMC key level was May 1st, and you can see it was immediately offered. The retest was also offered, and we've never come back to it since. So this is going to be a very important level to keep an eye on next Wednesday. All right, let's take a look here at the NQ. The NQ is also showing compression signal here, 1, 2, 3, 4, 5 days sideways in this narrow range. You can see the compression signal down here, and again, that tells you that we are very, very compressed compared to average range. Average range is this gray bar right here. So on a 5-day range basis, we're averaging about 400 points per week. So right here, 397.5 points. That's what this market averages on a 5-day basis. Right now, it's only at 179.75 points. That's 44.4% of normal. And when that happens, it tells you it's building energy for the next big move. And whenever we do see that move, it's likely going to be beyond the average of 400. It'll likely be somewhere in the neighborhood of 500 to 600 points of movement. So say we were to break down through 7,400 and drop 500 points, that could take us to new lows into 6,900. So again, retesting this low could be very, very possible here if we break to the downside. Again, we are running out of one way to the upside, so if it were to break to the upside here and test 7,600 or 7,700, I'd be watching for signs of rejection, because any rejection on a breakout to the upside could then lead to a move lower, very similar to the ES. All right, let's take a look at the crude oil chart. Here's crude oil. Obviously, this one had been on a clear path downward. We have 49.17 as composite VPOC down below. And the previous day we had the oil tankers that were attacked in the Gulf of Oman. That led to a big push higher in price. But one thing you notice here is the previous month's close continues to be offered. That has been the case most of the month. And that was the case yesterday. 53.36 continues to be offered. There was a failed new high yesterday, and price pushed right back to the midpoint of its trading session. Right now we have a narrow range inside day that's developing, kind of a doji at the moment. We're trading 46% of normal right now, and the path is still downward. If you notice this line right there, that is the 8-period moving average, and every time price comes to it, it's been offered here, offered there, and it cannot find acceptance above that level. That suggests we have more downside ahead. And if we do break to the downside, any breakdown here through the 50 half, 50 even level could not only get us to 49.17, which is that composite VPOC we've been talking about, but it could flush even further to the downside. We could be looking at somewhere between 45, 47 easily on the next flush. And if you look at the wider time frame here, one thing we're looking at in the trading room is the potential for price to drop back to the 40 to 42 zone. That's been a major area of support. that we've been watching. This is the level we talked about before, that 42s may be the final support level before we bounce after that major sell-off we saw last fall. That indeed happened. Perhaps we have to come back and flush back toward 40 to 42 yet again. So again, continuing to watch this market here, but overall that 55 level is a significant LVN. If price were to push back above that zone, it could open up the upside, but right now everything's still pointing to the downside, and there could be another 10 handles down from these current prices if price cannot get back above that 55 level. Lastly, let's take a look at gold futures. Gold seen an explosive move to the upside here overnight. We've seen quite the rally in the wee hours of trading. You can notice here up about 1% today, of 14.7 points. This thing pulled right back into the PIMA trigger zone and saw a big push higher. Again, we warned about that earlier in the week when price did pull back. I mentioned we're now in the bullish trigger zone. This market has been bullish, so we would likely see some sort of pullback of some degree. If it's a lower high, then that could lead to more weakness, but overall the real resistance zone comes above 1360 to 1375, and we have hit prices at 1362.60, rather 1362.20, and we have now gotten into 1360s. Right now, if you look at the weekly time frame here, again, this is a major area of resistance. That 1375 comes across right here, and you'll notice that for the last 5 years price has not been able to get above that zone. We do have a major rounded bottom, a major accumulation phase. If we were finally able to see a breakout through 1375, there's a clear path to 1525, a clear path back to that level. That was a major level here where it broke down and dropped very quickly to that zone, and then we have our new normal down here. So again, this is going to be very interesting to see if the price of gold can finally push through 1375 and get going to the upside. But as it is right now, got to treat it as resistance until proven otherwise. But this is going to be very important. Look at the weekly chart. We've had 1, 2, 3 strong weeks to the upside. It looks like it at least wants to give that 1375 a go. But again, got to let the market prove that it's going to break through it or perhaps reject. Any major rejection at 1375 could bring price right back to 1285, which is composite VPOC over the last 5 years. All right, that is it for now. We'll see how this develops heading into the weekend. Have a fantastic Friday. Please be sure to like, share, and subscribe, and I will see you in the trading room. Take care.